So hello active traders and welcome to our trading week ahead broadcast for today, Saturday, the 30th of October. I wanted to wish all of you the very best for a happy Halloween coming up tomorrow and looking forward to working with you in our live room. We got so many new members on board. It's been quite the growth journey as people have been joining, maybe not in droves, but at least quite a few coming in with the live room and more. We're really excited to be bringing new features, including migrating both the live room and all of our webinars to the Zoom platform effective immediately. I did want to encourage you to join me for a test of Zoom immediately following today's broadcast. At 10:30, we're going to stop the GoToWebinar and start with Zoom, and we'll see how that works. Hopefully it'll work out just fine. So it's kind of a beta test run today if you'd like to participate. And also it's a good opportunity for you to get familiar with what the Zoom platform looks and feels like for a live webinar in case you're not already familiar. Just a couple of quick admin notes. I'm going to be speaking for Money Show coming up this Tuesday, November 2nd, right at 11 or right before 11. I think it's 10:50, 11. Anyway, somewhere near 11 o'clock on Tuesday, I'll be speaking for Money Show, and I'll be speaking for Metastock on Wednesday, November 17th. So do be sure to pencil in those dates, both Metastock and the Money Show event coming up on Tuesday. Anyway, so the action item is please, at this point in time, click on the arrow next to the word chat and click on that link, or at least take note of it, copy and paste it, and also the meeting ID so that you've got the information needed to join Zoom. And for those of you who are interested, we will be doing that immediately after today's broadcast. All right, let's go ahead and get underway. So traders, hopefully you're doing well. The market's been up the last couple of weeks after the September sell-off, despite earnings misses from large cap tech this past week. The market's still very resilient, and it's very much a stock pickers market or ETF pickers market, and we're going to be looking at patterns to look at. Now, what I'm looking for is usually a false breakout. Whenever the market takes out a new all-time high, what immediately happens? Well, let's look at history. The last time the market took out a new all-time high, it lasted for all of a week, and then it crashed and burned for a month. All right, so be very suspicious. This looks all rosy, and it's always darkest before the dawn, and vice versa with the stock market. It's always brightest before it drops. So just because it looks all great up here does not mean it's going to stay up here by any stretch of the imagination. I want to see the markets maintain and hold over that 4550, 4600 level for a minimum of another 3 to 5 days before looking at initiating new swing trade longs, because we still have so many headwinds facing our broad market, whether it's, well, just look at the evening news. So we've got lots of problems out there. We've got 30-year high record inflation. We've got socialists in the White House trying to waste everybody's money, like $500,000 for some people. Anyway, don't get me started about politics. But the point is, don't be too eager to get in right now because it's a little late for a breakout cycle. We've been going up just over 2 weeks, 2.5 weeks in the market. So the thing that's the barometer that we always keep an eye on is the VIX. And I'm looking to see if the VIX gets back over 18 to 20, which is kind of the key support level for a bearish thesis. And you can see it's been above 18 for much of pretty much all of September. And it cycles up and down. Now, the VIX often pivots, right? Our volatility index is a very strong pivot indicator. And so one of the things you want to pay attention to is where is the VIX relative to the 18 and then again the 20 level. Those are the two key trigger points that I look at for bearish thesis, or it's a stop in the buyers is if the volatility index gets back into the 18 to 20 channel, that's a kind of warning sign that bears are starting to come back in. And if we get and hold over the 20, we may well see another drop like we saw in September. So when everything looks all bright and cheery and the talking heads are saying, oh, the market's going to go up forever, yeah, be very skeptical and very cautious. Now let's take a look at some of the both day and swing trading charts. One of the things I always like to look at is relative strength plays, like say Costco is always a wonderful company. I would never short Costco. That's something I personally, even though I like to short things, I would never short Costco. It looks great. And we have relative strength in energy, for example, our oil instruments like ConocoPhillips, Apache, and the UCO ETF. all strong long patterns in oil. One thing that we are starting to see a potential pivot in is the inverse to natural gas, which I'm currently long, just a couple hundred shares, trying to catch a bottom here because we have a triple bottom in the KOLD ETF, and that is what goes up when natural gas goes down. And so natural gas has been on quite the run, as evidenced by the long bias boil. It's kind of cute how they come up with their creatively named. So for natural gas long, oil has been quite the runner, but it's been chopping around up here, right? And it may well drop. So if it does, KOLD is one of our favorite swing trading picks that we cover in the live room as well. So we'll take a look at that. Now I want to switch gears to take a brief look at some of the intraday charts. We take a look at those. A couple of big runners lately. LSID was quite the runner on Thursday, right? Was anyone out there trading LCID? Look at that run on Thursday. Ran all the way from 28 to 40. And these are the kind of charts I like to cover in the live room. In fact, we looked at this one yesterday because of volatility we saw on Thursday as well. And you can see that the things that differentiate really good charts. So just think how much money you could have made if you traded this thing on the way up, at least on Thursday, and a bit on Friday during the first spike up to 41.5. These are much smarter charts to trade than these small cap under $10 pop and drop, low float garbage day trading stocks that people who, the point is, I like charts that have multiple points of range that are over $10 a share, under 30 or 40 a share. 40 is about as rich as I like to trade. Most of the charts I like to trade are 15, 20, 30 bucks a share like this guy. And these, spectacular run. You're not going to see a 12-point run on a $5 stock, right? But you did on this. And what's more important is this was easier to trade instead of the hit and run day trading approach. I like charts where you can put on the trade early in the morning, let it run at least till lunchtime. And if it keeps going up, great. Or if it starts to pull back, get out. That's fine. If you just caught this leg of the run, you could have made a quick 4, 5, 6 points. And then if you want to play the afternoon, you can play a subsequent breakout as well. But these are charts that are more consistent potentially than the pop and drop charts. Now, one thing to keep an eye on next week, I think is a good play is US Steel. X had a really good gap up. That's my favorite steel instrument. And so a seasonal play or reopening play or infrastructure play, obviously things like steel and lumber and concrete manufacturers and other things that go into rebuilding like X would be a good play for consideration. Another good momentum runner, GREE. Look at how far this guy ran, all the way from just around $21 a share as high as 28. And again, these are the kind of charts we cover in my live trading the open room because they have much bigger point potential than the relatively foolish video game, play the $3 stock with thousands of shares and hope you get it in 10 seconds before it. That's how people, I inherit so many traders who get blown up by these small cap day trading rooms. It's much smarter, I think, to trade charts that have much bigger range like this and much better profit potential in my professional estimation compared to the super cheap charts that are very thinly traded. Now you may have noticed, just a quick admin note before we move on, that we've been working really hard to upgrade everything about the live room, and we've upgraded things significantly in terms of the mobile friendliness and the design layout. I've hired a small army of half a dozen UX, user experience web designers to help improve the usability of the sites because we've really been growing quickly. And even though I've been around for 20 years, we got a lot of new traders on board, especially this past year, I guess because of pandemic or whatnot. So we got lots of new people on board. And so I do encourage you to take a look at the live room. Take a second look at it. We've updated the pricing to be more trader friendly, and we've got lots of features. And we are going to be moving to Zoom on this starting no later than the second week in November. So we're going to beta test it next. We're going to do some test runs with Zoom next week in the live room. We're still going to be in GoToWebinar next week in the live room, but starting week after next, we're going to be full-time on Zoom in this and everything we do. So that's another nice benefit because the Zoom platform is really modern and advanced. And you know, we cover a lot of stuff here. You can take a look at the site for more information. There's me at a nice lake in Colorado down the street here. And so we got lots on board. So anyway, moving right along, let's take a look at some more charts. Now, does this kind of chart appeal to you? It does to me, because you can get the number of points. Like this one, you can get as many points out of. I like charts, by the way, that you can get as many points out of a day trade that you could have had you swing traded it and had to wait a couple of weeks to get 5 or 6 points out of it, right? This guy, you could have just traded for a couple hours and you didn't have to be in a rush to get in. You could have gotten at 21, 22, 23 and still come out smelling like a rose anywhere from there. And you don't have to sell the exact top at 27, 28. You know, I would typically buy like the 22 and sell 24 or 25, and that's fine. So when you're looking for good directional charts, you want nice, wide, clean, tight charts with multiple points of range on large volume that are relatively easy to trade. Now, pivot play in Apple is one that I alerted my members to. I called along north of the, I think it was 148.70, something like up there. Anyway, Apple ran up nicely after the earnings miss, gap down yesterday, and it did a 50% retracement to exactly the prior day's opening range, or the low near 150. And see, it ran from 147 to 150. Now, to me, this is not as impressive a move because the leverage is no good, right? I mean, yeah, it's a nice bounce, but you got to pay $150 a share, and maybe you get a point or at best 2 out of it, right? I prefer charts that go a little something like this, where you can pay a fraction of the money and get multiple points, and that's a good runner. Now, one that I traded yesterday very successfully too, and I called it live for my room members. I bought 212 and sold up there in the 230s. If you do trade cheap charts, this Mark one was a really good play. I spotted it when it started running over $2 a share. Out of the corner of my eye, I saw this run and I said, okay, I'm going to hit this right over the 210. And so I think I bought it as 212, about hundreds of shares, and it ran up nicely. And I got out right near the, what turns out to be within a dime or so of the top, and it's up there. I ran all the way to 2.5. But still, this kind of chart is tougher to trade, I would say, than some of the ones that we normally like to focus on. What about this chart? This is one that I alerted my members to repeatedly this past week. BKKT, Bravo Kilo Kilo Tango. BKKT ran all the way from 26 to 40. Now, if these are the kind of charts you like trading, these are kind I like to trade. I trade this because it's got multiple points of range. It's got a nice clean chart pattern. It's not being manipulated by some front-running chat room guru trading some thinly traded under $10 piece of junk stock that he's saying it's going to go up, and then he sells to them as all his traders try to come into it, and then it's a game of hot potato whack-a-mole. We don't do that. We like charts that have high volume, strong volatility, and the very best chart patterns like this. And again, this lends itself well to the more relaxed, more conservative, all-day long day trade approach. I mean, sure, we do hit and run open range breakouts for 20-minute round trips or 5-minute round trips or whatever as well, but there's something for everyone. And if you're brand new to day trading, or you got frustrated and wanted to give up on it because you got stopped out too often, I urge you to reconsider not day trading at all and come back. If you're not yet a member, or if you've been a member in the past, return to or come to my live trading room, because we like to cover charts that go a little something like this, where you could put on the trade early in the morning, say you buy it at 30 or 31 or 28 or whatnot, and then you come back after lunch and hey, it's up at 35. Take the money and run. That's fine. Maybe you didn't let it run all the way to the close, but you know, you could have at least got a few points out of this. So these are the kind of charts that we like. A good question from Wendy, a very smart question. How do you do with the big pullbacks? Well, that's my strategy, designed to manage not getting shaken out, is you put on the trade early in the morning, like say 9:30, 10, anywhere in here, and the thing is, you got to put the stop under the pre-market low. So obviously you're not going to use a multi-point stop with hundreds of shares. You know, I would just buy some like maybe 50 or 100 shares of this at most, and if it runs up 4 or 5 points, maybe make $400 or $500, and that's fine. So the way that you deal with large pullbacks is don't even bother trying. It's really difficult. Been doing this for 20 years. You do much smaller size with a much bigger initial stop and let it go from there. And if it runs up, great. And if it runs down, it's a small stop on small shares. So that's why your risk reward makes sense, and you're looking for charts that have big ranges like this, and that's how you manage them. But yeah, it's a good question. Now, they were short gold a bit, right? Dust, the inverse gold, has been strong the last couple of days. So despite strength in metals like X, the US steel, commodities like gold, the precious metals under a little bit of sell pressure. So dust got dusted and it ran all the way up here. And this is how to short gold. So this is my favorite swing trading chart pattern on a 2-day chart. My favorite swing trading chart pattern looks just like this, a nice 45-degree angle, a minor gap continuation, nothing too exciting. This one isn't one of those that I just mentioned with that 8 or 10 point range. You don't want to swing trade those, but things like this where your risk would be, let's say you buy the 20, you put a hard stop down at say 1860 or 1880, it's a 2-day low, or maybe scale out a half if it gets back down to 19.5. But these are the kind of charts you're willing to focus your energy on as a swing trader. And these are the ones we like to focus on in the live room. I'm also long cold. Like I said, I showed you the longer term chart. This is what the beautiful looking short term chart looks like, right? A nice steady grind up. It's very strong. The weakest charts are ones that are vertical runs up and come pop and drops and run right back down. The strongest charts are nice 45-degree angle continuous runs like cold. And this is one of my favorite inverse instruments to play with, as is UVXY, which had done really good earlier in the week. Not so much this last couple of days, but I had a big swoop up early in the week as well. Another indicator we pay attention to in the live room is the ARMS index, also known as the trend, and developed by Henry ARMS back in 1964 when I was born. It is an inverse indicator to the market, and this is a short pattern. It's very interesting divergence, right? The trend has been kind of unhinged from the market as of late, but you can see this is a bearish trend. This is a very bearish trend. And again, think like a market maker, right? Think like a professional Wall Street trader. Despite the fact that the S&P was up sharply for the last couple of days, the ARMS index is saying, wait, hold your horses, put the brakes on. There's some divergence. That means we've got an underpinning of bearish sentiment with probably the small and mid caps. Despite some of the large caps leading the market higher, we've got some weakness in other sectors, or other industry groups. So you see divergence of the trend. The trend and the VIX are the two market internal indicators I teach how to trade with. And those are really important that you arm yourself with those as you look for trade setups. Now, Carnival did a nice pop and drop, right around all the way from 22 to 22.5, and then came right back down again. One thing that I like to teach is not only the whole number resistance areas, but the midpoints at the 0.5s. So we like to wait for it to get over the 50 or to get over the whole number before putting on a trade. And then once it runs up, say 20, 30 cents, you trail a stop at break even. So this would maybe a scratch trade. Let's say you bought 22.2 and it ran up to 22.5 and started to pull back. You'd use a break even exit on it. So looking for trade setups like that makes a lot of sense, as well as looking for big momentum runners like this chart. And one thing that we like to cover in the live room is also our swing trading charts. And I gave you one example of cold as one of my favorites. We like to look at the 2-day high breakouts for good, consistent uptrending charts that have good volatility and pretty smart trading ranges, pretty strong ranges that indicate buying is somewhat consistent over time. Because, if you're an active trader like I am, if you trade anywhere near the kind of volume I do, one thing you notice is that it gets very frustrating if you get stopped out, or if you get in too late or too early. It's kind of like eating a banana. If it's too green or too brown, it's not. You don't want to do that. Or an apple that's too green or too ripe. You want to put on a trade that's right in the sweet spot, right where it's not too green and not too ripe, not too early or not too late. Or like playing jazz on the horn or whatever, you play your notes in time. You don't jump in too soon and you don't hold the notes too late. And as an active trader, you really owe it to yourself to develop a pattern, a sequence of trades that makes sense. And one thing that I teach a lot in the live room, which I am not going to be able to in today's session because the market's not open right now, is use the math and the numbers and your directional volatility and trading ranges are much more important than simplistic chart patterns. You know, that's one thing. And I went out of my way to ask the brilliant Tom Sosnoff this question because he's such a smart guy. So much respect for Sosnoff. He's so right about everything. I've never heard Sosnoff say anything that's that's not correct. And I did the Success Summit, the Trader Success Summit with Tom as our keynote speaker just last week or week before, whatever. The video's on my YouTube channel, but I always ask him one smart question a year, right? Because I know he's beyond busy. He's a very valuable person. And one of the things that I asked him was, Tom, so what's the role of charts? And he was saying, because it's like I told him, traders spend too much time on chart patterns and not enough time on the math and the numbers behind the trades. And he said, hey, again, you're preaching to the choir. You know, he's a floor trader and they didn't even use charts, right? And so professional traders, much more about the numbers, right? My biggest winning day trading days, this the last week or two, is I'll put on a sequence, a series of orders, and I don't even pay but passing glance to the charts. I spend a lot more time on the DOM. I spend a lot more time on the entries and the trade management, putting in one triggers the other orders, so that when I get an order fill, let's say I want to buy this guy, I'd hit 37.7 with the hard stop at say 37.30 or so. I'd put that in as a one trigger the other OTO conditional order. And then I'd buy again or say 38.40, and then 39.30, and then 40.40. Put on a sequence of trades, and the chart becomes largely irrelevant. What's more important is directional volatility and momentum. And there's a lot of misconceptions. I mean, I founded the original Day Trading University site back over 20 years ago, and there's a lot of misinformation about how to day trade professionally. And so I hope to correct that and give you some examples. I trade live in my room with live real money trades in my Fidelity account daily in front of my members so they can see me putting on real trades. And one thing that I encourage all of you to do is, open yourself up to alternate ways to trade. Make this upcoming quarter and the year ahead a transformation, right? Do things a little more intelligently with a little better focus. As a former corporate statistician for the Ford Motor Company, I've got a very strong quantitative background. And as an active trader for over 21 years, doing millions and millions of dollars worth of trades, I've got a lot of experience under my belt that the younger people simply don't have. I was day trading back when they were in kindergarten, right? So I think I'm a good guy to learn from. I think Harry Boxer is the only other person I'd recommend for active day traders. He's brilliant. Boxer's brilliant. I'm brilliant. Well, I can't say. People have told me I'm brilliant. But Harry Boxer, the tech trader, is great. I'm really good too. And he and I are the only people I'd recommend for day trading training, because he knows what he's talking about. I know what I'm talking about, but a lot of what else is out there is a lot of smoke and mirrors. So let's get it right. Let's see what else is out there. Let's take a quick look at some swing charts here, and we will wrap up. And then we're going to switch over to Zoom in a few minutes. Look at that. Now, this would be a terrible chart to swing trade, by the way. All charts are not created equal. This is a brilliant chart to day trade, horrible chart to swing trade, because as you all know, a lot of times when something does a 8 or 10 point run up, it gives back half or more of it on a subsequent day. So you don't want to trade wild and woolly charts like this. Swing trading charts that are more sensible are ones like Costco, right? A nice clean directional run that has relative good consistency and didn't run up 20 points and then crash back down 20 points and so forth, right? Some of you folks had asked about some of these last week. Metz looks good. I had a gap up on Friday. That's interesting. Note to self. Actually, I'll annotate that in my main portfolio box here, so I remember it for my traders. I'm always looking for smart ideas. ConocoPhillips is up, IGT, and up and down. It's pulled back, bear shooting star up here, right? So this is saying, sell me right here, and don't buy me until I get back over 31. Be sure to learn candles exclusively from the brilliant Steve Nissen at candlecharts.com. He is the world's top authority. No one else is. Steve Nissen with an N, I-S-O-N. I've made so many winning trades based on what I learned from Nissen over the last 20 years I worked with Steve. And he's a wonderful guy. He's a really friendly, very nice person and very intelligent. He knows exactly what he's talking about. He had a really good, when he was one of my Success Summit speakers last week, he was talking about risk reward scenario based on the specific patterns. And that's something that it was new for me. So I'm still learning from Steve, even though I've worked with him for 20 years. So a brilliant guy. Steve Nissen and Harry Boxer, two brilliant people. I have, and Tom Sosnoff, of course, and his team over at Tasty Trade. I have absolutely no hesitation of recommending them as the best in the world to learn from. Now, see, this chart would be insane to swing trade. It's you got to be a clever day trader to trade this one, right? But this has way too much volatility. You're gambling if you buy, say, 38 or 40, and then Monday morning it's gapped down to 26. I mean, that's not good. What you want to do is know the difference between charts that are worth swing trading versus day trading. And you'll learn that once you join me at Trading Open. Now, because we are reinvigorating everything and switching over to Zoom and enhancing with so many new features and benefits for our members, if you have done a trial in the past, you can redo a trial. Normally, I say just one trial per person, so I don't have people perpetually trialing the room. But if you have been a trial member in the past, you can retrial it now that we're switching to Zoom. We've got so many new features, so we're doing that. And if you join as a regular member by Sunday, if you're one of my current trial members, or if you're considering joining or rejoining as a regular member, I will give you a $200 gift certificate good towards any of my downloadable courses as a bonus if you join for the monthly or the annual plan. So I think that about wraps us up. Let me know if any questions, friends. We are going to switch over to the Zoom platform here in just a few minutes to test it out. Let me give you the link one more time. If wow, a lot of people joined late. Congratulations, you're in the right place. For intelligent trading, hopefully intelligent trading. You know, one of the things, and I mentioned this in the Success Summit too, I had Larry McMillan, Tom Sosnoff, Steve Nissen, myself, and Jeff Gibby, and a really good turnout, a huge number of people that showed up for that thing. The winning percentage of trades that you get is irrelevant to your trading success. My biggest winning trades, I'm frequently making 60, 70% stop outs, but I make it up because my wins are bigger than the stops. Do not worry about percentage of winning trades. It's irrelevant. What counts is how much money did you make or lose, right? So my approach to trading is take a lot of small shots. Exactly what Sosnoff says about trade small, trade often. Be sure to visit and be sure to watch Tom's first call Sunday afternoon or Sunday evening broadcast. I just watched the first 10 or 15 minutes. He and Tony talk about crypto and the S&P futures, the SPOOs, and I highly recommend Sosnov's on YouTube streaming Sunday evenings. Be sure to watch those. I watch them every Sunday afternoon. Just the first 15 minutes or so with Tom in them. I watch that. Do be sure to learn how to trade, like he says, trade small, trade often. That's the approach that I advocate as well. Any good seasoned trader will tell you that. It's a numbers game. The wrong way to trade is a big trade based on squiggly lines on a chart pattern. Well, across the VWAP, or there's a MACD crossover, or there's a RSI signal, or moving average crossover. So I'm going to bet hundreds of shares, and oop, I got stopped out anyway. That's going to happen to you for the rest of your life. The only way to make it as a trader is throw lots of darts at a random market with really tight risk management and position sizing and careful scaling, right? So, my biggest winning days, I'm frequently wrong. I'm almost always wrong in the number of trades I make compared to the number of wins I make. But on the days that I'm very green, it's irrelevant because the wins are bigger than the stops. I'd much rather take 10 $50 stops. I'd much rather take 10 stop losses of $50 each than a single $500 stop loss, because I got 10 times the number of chances to get things right, and it can always scale into the ones that work out. So we're playing with the house's money. So good stuff. Hey, thanks, man. All right, thanks, Phil. Saying very informative webinar, great speakers, and they know how to teach. Good. Hey, Wendy, thanks on Costco. Oh, thanks, Mick. Yeah, I work with a lot of different people in the industry. Another thing too to be on the lookout for is we are going to be doing a lot more webinars with partners and doing my worldstoptraders.com site, and we've got a lot of people lined up and a lot of people interested. So I've got a backlog of people who want to speak with me. So look for those coming up, not only the tail end of this year, but throughout next year as well. So anyway, with that, friends, I think we're at about out of time. We're going to switch over to the Zoom platform now. So do join me for Zoom.